Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's February 5th. We got a few economic news releases to go over today. So we'll start off with the market services PMI. These two indexes we're going to go over are regarding the services industry here. So anything on both of these indexes above 50 is considered expansion or improving conditions here. So as you can see, both of them are going to be in expanding conditions here. Market services went from 53.7 on the last reading to 53.3 in January. A little bit disappointing there, but however, on the ISM Manufacturing Index, also ISM known as ISM Services Index, went from 56 with a forecast of 57 to 59.9. So a pretty big jump on the ISM. So we have a slight conflict here, but still both are in improving conditions here, which is obviously good signs for the economy here. Let's bump over to the headline news. Stock market is a little mixed at this time. They did start off lower. The Dow actually was down even further, like at 200 points, but since this morning has pulled back a little bit to 70 right now, whereas the S&P 500 went into slightly positive territory. NASDAQ did go into positive territory. They're up about 30 right now. So those are obviously good nights for the stock market. Also on the agenda today, we got this morning, so far this morning, actually this morning it happened already, of the Jay Powell, or also, that's his nickname, Jerome Powell, to become the new Fed chairman. So congratulations to him. So we have our new Fed chairman today to be in charge of the Fed here. So Janet Yellen has stepped down and will be going out to doing, I don't know if she's announced what she's going to be doing yet, so, but she'll be leaving the Fed and into a different role here. Let's go ahead and take a look here at the bond market, and as you can see, the bond market has got this straight path here, and I don't believe we've hit the bottom yet, so this is continuing to raise interest rates. We're currently down about 17 basis points from where we left off on Friday. Friday was a pretty big day as the stock market took a pretty big beating. It was, I think it closed down over 600, which was the biggest single day decline in like 2 years here. But today this is going to continue as we'll see here in a bit. We're going to look at the treasuries, and the treasuries still haven't reached the next threshold, so it's got a lot of room to go before we'll see probably any floor in the mortgage-backed securities, and that could help us out here. So we'll just go ahead and take a quick peek here. As you can see, we got this sharp incline here for yields here, and most likely we could potentially hit up to about around 3% before we see anything there. So if it goes above that, of course, that's going to further deteriorate interest rates. But so far, interest rates did worsen from Friday's numbers, or where Friday left off, and it doesn't look like there's a lot of insight here. We do got, the Fed unwinding, so there's not much appetite from the Fed buying these. They're actually trying to unload a little bit and purchasing less and less of these, as we call it, the great unwind. So when we have these auctions, we need other investors to step in to fulfill the Fed's role. So this is another reason why we're seeing interest rates continue to rise, because there's not as much investments. And with the weaker dollar, we're not getting a lot of foreign investors coming in here to buy, because they would lose money on the currency exchange due to the weaker dollar. As we see more inflation, that erodes the value, so that creates higher yields here. So again, this is kind of what we're seeing right now, and we'll see how long this lasts going further. But at least in the short term, we're seeing rates going up as a result here. All right, so that pretty much wraps things up. If you guys want to get more data, just come over to Twitter. You can find me on my handle at Mike Bjork. Hope you guys have a great rest of your day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.